Welcome back, everyone, and thank you for joining the channel. Today we are going to explore one of the most talked about and widely debated cryptocurrencies in the digital asset market, Cardano and its native token, ADA. Over the past several years, Cardano has built a unique reputation in the crypto world. Unlike many blockchain projects that prioritize rapid development and fast market expansion, Cardano has taken a more academic and research-driven path. Its development process has emphasized peer-reviewed research, collaboration with universities and scientists, and a carefully structured approach to building blockchain infrastructure. This content is for educational and informational purposes only and should not be considered financial or investment advice. Cryptocurrencies, including Cardano, ADA, are highly volatile and involve significant risk. Always conduct your own research and consult with a qualified is not a financial advisor before making any investment decisions. The creator of this content is not responsible for any financial losses that may occur as a result of investing in cryptocurrency markets. This methodical strategy has allowed Cardano to earn respect across much of the cryptocurrency industry. Many developers, analysts, and blockchain researchers appreciate the level of thought and rigor that has gone into the project's design. However, admiration for technology does not always translate into strong investment performance or large-scale ecosystem adoption. In the world of cryptocurrency markets, technological excellence must often be combined with real economic activity, developer engagement, and a thriving network of users and financial applications. Without these elements, even the most advanced blockchain platforms can struggle to compete against ecosystems that move faster and capture liquidity earlier. In today's discussion, we will take a deep and thoughtful look at where Cardano stands in 2026, what recent developments mean for the future of the network, and why some analysts believe investors may need to carefully reconsider their expectations for ADA compared to other leading blockchain platforms, such as Ethereum. We will examine the technology behind the project, analyze adoption trends across decentralized finance, explore the importance of liquidity in blockchain ecosystems, and compare Cardano's current position to other networks competing for dominance in the digital economy. By the end of this discussion, you should have a clearer understanding of both the strengths and the challenges facing the Cardano ecosystem as the crypto industry continues evolving toward the end of the decade. As of March 10, 2026, Cardano's native cryptocurrency ADA is trading in the approximate range of 25 to 26 cents per coin. Over the past 24 hours, the token has shown modest price gains, reflecting a relatively calm trading period compared to some of the more volatile movements often seen in the crypto market. While the short-term price action may appear stable, the broader conversation surrounding Cardano remains extremely active. Investors, developers, and analysts across the cryptocurrency community continue to debate the project's long-term prospects. Some believe Cardano's methodical approach will ultimately produce one of the most secure and scalable blockchain platforms in existence, while others question whether its slower development cycle has allowed competing ecosystems to pull significantly ahead. One of the most interesting developments currently attracting attention within the Cardano community comes from the project's founder, Charles Hoskinson. Hoskinson has recently been discussing the potential of what are known as intent-based transaction systems. This concept represents an attempt to fundamentally change how users interact with decentralized finance platforms and blockchain applications. In traditional DeFi systems today, users must manually execute a sequence of technical steps when performing financial actions on a blockchain. For example, if someone wants to swap one token for another, they may need to connect their wallet, approve a transaction, pay gas fees, confirm multiple interactions with smart contracts, and carefully review each stage of the process. For experienced crypto users, this process is manageable, but for newcomers, it can be confusing and intimidating. Intent-based transaction systems, for example, could significantly simplify DeFi interactions for everyday users. If blockchain applications become easier to use, millions of people who currently find crypto platforms too complex might begin participating in decentralized finance. Likewise, the tokenization of real-world assets could open entirely new financial markets if institutions begin issuing tokenized securities, bonds, or commodities on blockchain networks. However, these possibilities remain largely forward-looking scenarios rather than current realities. Investors must decide whether they believe Cardano will successfully translate its technological roadmap into meaningful economic growth. For now, the available data shows that Ethereum continues to dominate decentralized finance while Cardano works to expand its ecosystem and attract additional capital. Because liquidity tends to concentrate in environments where activity is already strongest, this gap could remain one of the most significant obstacles facing Cardano's long-term growth. Ultimately, every investor must evaluate their own strategy and risk tolerance when deciding how to allocate capital within the cryptocurrency market. Some investors prefer focusing on platforms that already demonstrate strong adoption, high liquidity, and large developer communities. Others are willing to invest in projects that may experience dramatic growth if their long-term technological vision is realized. Cardano sits directly in the middle of this debate. It is a project that commands intellectual respect and continues to pursue ambitious technological goals, yet its economic footprint remains smaller than several competing blockchain ecosystems. Whether this gap eventually closes will depend on the pace of innovation, the ability to attract developers, and the willingness of users and institutions to bring capital onto the network. As the cryptocurrency industry continues evolving toward 2030 and beyond, competition between blockchain platforms will likely intensify. Projects that successfully combine strong technological foundations with vibrant economic ecosystems will have the greatest chance of achieving long-term success. Cardano's future will ultimately depend on whether it can convert its research-driven philosophy and ambitious roadmap into a thriving, liquid, and widely used financial network. If you enjoyed this in-depth discussion and want to see more detailed cryptocurrency analysis like this, make sure to like the video, subscribe to the channel, and turn on notifications so you never miss our next breakdown of the markets. Thank you for watching, and we'll see you in the next video.